Hi there, welcome to our monthly market update. For those more observant with you, I am a little bit tardy in the filming of this, but with that tardiness comes the benefit of being able to take a little bit more of 2023 so far and give you a really good idea of what is happening in the property market right now. As well as that, and as I always try to, I will make some broad predictions of how we see things panning out over the next few months, perhaps even over the year. Before I do all of this, as I always ask, hit that subscribe button. You'll get some notifications if you press the bell icon of when we film these videos. And of course, if you like the video, or as I always say, just feel a bit sorry for me, then click the like button. It really, really does help us out. So let's get into the market so far in 2023. Now, in order to make comparisons, what is really important is that we try and block out the noise of the last couple of years. The post-pandemic boom has been a very busy period for the property market, but it is not a true reflection of where we would expect to normally be. So we've got to go back to the years of 2017, 2018, 2019, and I have said this in previous videos that I've filmed in order to get an idea of where things are currently at. So when I make the comparisons, the volume of new listings so far in 2023 is up 5% on the same periods comparative to those years. The number of sales agreed is again up by a very similar value on that period as well. And that gives you an idea of the underlying level of demand that we have talked about previously that exists in the market. And what of prices? So I said in my last videos that at the back end of 2022, we did see a response in a negative way to the Truss and Kwarteng budget that happened at the end of September, the now disastrous mini budget that we can recall. We saw prices come back by a couple of percent. At the start of 2023, however, we're already seeing that respond in a positive way. Rightmove said that the average price of property that came to market in January was 0.9% up on where it was in previous months. And interestingly, that's the highest level of increase since January of 2020. Just gives you some idea of where the market's at. When we look at our own average price of property sold, we can see that that is now 3% up on where it was at the back end of the year. So interesting. Let's give it a brand name. We seem to have not quite the Boris bounce, but perhaps the Rishi rally at the start of 2023 as prices respond in the way that we had hoped. The doom merchants, I'm sorry to say, have got it wrong again. So I guess the question then is, having accurately predicted what we thought might happen at the start of 2023, if you go back in previous videos, you will see exactly what I've just said I thought would happen. The question now is, what can we expect for the coming months, next 6 months, perhaps even the next year? In order to try and give you a feel for this, I'm going to, as I do on the rarest of occasions, try and give some basic economic theory as to why we think what's going to happen will happen. And I'm going to break this up into 3 parts, and I'll put some pretty graphs on the screen even so that you can see exactly what I'm talking about. So let's first of all talk about interest rates and the cost of a mortgage. So throughout the last year, we have seen interest rates, the base level of interest, rise from where it was at its lowest level of 0.5%, now all the way up to 4%. But when you read all the commentaries, what is interesting is that at that 4%, as long as inflation continues to do what it's doing, and we'll come on to that, we don't expect interest rates to go any higher. And interestingly, when you then look at the cost, and I'm going to put the graph up on the screen now, of a mortgage that you can get out there in the market and go all the way back to the year 2000, what you're going to see is that the cost of a mortgage today is really no worse than it would have been in the early part of the 2000 period through to about 2008, when of course the credit crunch hit. So where we've been over the last 10 or so years has not been a true reflection of what we would all normally expect with interest rates. We're now back into a far more normal environment. People then say about whether or not people can afford to make mortgage payments at this high level. I'll come on and I'll deal with that point in a moment. But if I can then move on to my second point. So let's talk about inflation and particularly energy prices. Now look, we're all very aware of the awful period that we've had in terms of the cost of living crisis. And a lot of that comes down to the cost of energy. We've seen inflation pushing out over 10%, and that figure is now starting to come under control, which is really, really good to see. And again, I'm going to put up another graph on the screen, which is going to show the spot price of energy or gas in the EU, which, as you can see, is now coming down at a significant rate from where it was in the middle of last year. We are having a slightly warmer winter than we would have expected. And as long as that continues, I think we can expect that inflation will continue to fall at a rate. And in turn, that will mean that interest rates can stay at the level which they now are. And as long as those things happen, that will then lead us on to a period of relative stability in the property market. But then that takes me nicely onto this third point, which is all about the real cost of a property in the UK today. And this actually will answer one of the comments that I had on the last video from one of my few fans. And I'm grateful for that comment. So when you look back on the long run trend, and what this chart does that I've got on the screen now is it adjusts the price of property for inflation. And what you can see when you follow this graph is that the cost of a property, or the real price of a property, is actually no different to what it was in 2003. So when you hear people say about how house price growth is unsustainable, how the market just can't take it, it's simply not true. Let's put another graph up on the screen, and this proves the point even more so. This shows the percentage of take-home pay that is attributable to mortgage payments. And you can see the various different peaks and troughs in this graph, but fundamentally, the cost of a property as a percentage of take-home pay is exactly the same as it was in 1972. Of course, for those who are around back then, you will know that the majority of mortgages back at that period were taken in a single name, where now, of course, we have normally two people buying a property. And that's a critical part of that graph. But nonetheless, we are still running at around about 30 to 35% of take-home pay that people are spending on their mortgage. So there is a little bit of sway within that to allow for interest rates to go up if indeed they do go up a little bit further. Okay, so what I've provided you with there is a very simple snapshot of some thoughts that back up what I think is going to happen through the course of 2023. Again, I can't stress it enough. Block out the last couple of years. It's been a boom period in the property market. We have to start thinking about this as being a normal environment. I realize there's lots and lots of other stuff going on out there which might make people feel this isn't normal, but in property market sense, that's where we are today. So what that also means is that transaction numbers, which cap out probably about 1.4 million in 2022, they're just going to return back to 1.1 million. Big developers are going to constrain the supply of property coming to market, and that in turn is going to also hold prices to where they are. The environment in terms of mortgage lending is going to be as we need it to be to promote reasonable volume of transactions in the market, as I've just said. So all of that in respect of prices means that I think, against perhaps what some commentators might say, that we are going to see either no growth in prices or perhaps a return to normal. A normal for us looks like house price growth of around 4 to 5% per annum. I'm not quite ready to make that call just yet. You're going to have to tune in to the next video that we'll film, hopefully at the beginning of March, and I'll try and put some exact numbers on it at that point. Any questions, pop them in the comments. Love to chat to you all in there. And of course, as I always say, if you're interested in making that move in 2023 or just talking to us to find out the value of your home, give us a call. We're available 8 AM till 8 PM, 7 days a week. And as always, thank you for watching.